What's going on, traders? Welcome to Investing Trends, where we talk about the latest news and trades on trending stocks. I'm going to be doing something different in this video, more ways to make more money, hopefully. It was inspired by this couple where one is a PhD student in finance and the other is a pharmacist. And they just wanted to hear my top stock picks for the week. Just a handful of stocks that would be highlighted for the week and put on a spotlight for them to see how they perform later on. And it may be a good way for me to make more money as I do this exercise. So with that, I am putting Draftkings and Twitter stocks on the spotlight as it was ARK's top buy for this week. I may pick stocks I feel bullish here and not just ARK's top buy, but let's see how this unfolds the following week. So for Draftkings, ARK bought 166% of its holding this week. I've been talking about Draftkings in this channel for a while now, and I'm bullish on this stock even before Cathie Wood added to her holdings. So take a look at my past videos on Draftkings to learn my detailed perspective on the stock and the company as a whole. And the runner-up is Twitter, where Ark Invest bought 72% of its holdings this week. The stock has gone up a lot over the past weeks, where this week alone it is up 20%. And for the past month, it is up more than 45%. But the big question, the million-dollar question, is if it's too late to buy now. Can I buy Draftkings and Twitter now? It went up a lot already. Is it too late? Well, I created a spreadsheet tracking the performance of these two stocks, but let's be honest, it wouldn't be that much fun if we just looked at the stock price history of these two dates. And let's make it a little bit more exciting and see how the weekly options play out for these super active stocks from Ark Invest. And before we get to the tracker and the option play, here are the latest news and updates on Draftkings and Twitter for more context. So here are some key statistics on Draftkings. With national online gambling growing at a rate of 13% annually and more states aiming for legalization, there are good reasons to believe that Draftkings stock has more room to expand in the long run. The largely untapped sports betting market is huge for Draftkings stock. From the company's latest fiscal report, the company saw revenue rise 98% to $132 million. And the company raised its full year 2020 revenue range to $540 million to $560 million. That represents 25 to 30% annual growth of revenue. And the company provided a 2021 revenue guidance of $750 million to $850 million, and the guidance equates to 45% year-over-year growth. And here's a quote from the CEO, Jason Robbins: "The resumption of major sports such as the NBA, MLB, and the NHL in the third quarter, as well as the start of the NFL season, generated tremendous customer engagement." And here, as you may or may not know, New York Governor Andrew Cuomo has expressed support for sports betting in his state. Meanwhile, recent news in the Texas governor's office reaching out to New Jersey for advice on the legalization issue could be another boost jab for the industry. So again, this Draftkings is a regulatory play where the states need to legalize sports gambling, and as more states are looking to generate more revenue for the state, it does look promising that these states are going to legalize online gambling even more. And the Draftkings earnings date is coming up, where it is going to be on the February 26th of 2021. So mark your calendar, as this is a very exciting moment for Draftkings. Now, Twitter has also been showing up on the headlines, where the stock jumped 20% following reports that the company is weighing in on the possibility of adding Bitcoin following Tesla's initiatives on buying a bunch of Bitcoin, I believe $1.5 billion of Bitcoin. Yep, here we go. Reports of Twitter's possible Bitcoin acquisition following Tesla's announcement they acquired Bitcoin worth $1.5 billion. And here is it's a pretty good article where they're saying that $50 billion is wiped from Tesla after buying Bitcoin by MasterCard, and Twitter are surging. And I want to highlight here social giant Twitter's stock surge following comments that the firm may soon buy into Bitcoin. During an interview on CNBC Squawk Box on February the 10th, the tech firm's CFO, Ned Siegel, said that the company is considering to add Bitcoin cryptocurrency to its own books and using it for Twitter's employee salaries. So if you're an employee at Twitter, you may be receiving Bitcoin or other cryptocurrency as your salary down the line. Let's check out this video from CNBC.
CFO question for you here, which is we just watched. Well, we just watched Elon Musk take corporate treasury money effectively and invest it in Bitcoin. And given Jack Dorsey's interest in Bitcoin, I'm curious what your reaction to that was and how you think about that potentially for Twitter itself.
So we watch closely what other companies do to see what we can learn from them. And when we think about our balance sheet, we think about matching how it's invested and the currencies in which it's invested relative to how we might pay people, whether it's paying somebody who's providing a service to us or paying employees. So we've done a lot of the upfront thinking to consider how we might pay employees should they ask to be paid in Bitcoin, how we might pay a vendor if they ask to be paid in Bitcoin, and whether we need to have Bitcoin on our balance sheet should that happen. It's something we continue to study and look at. We want to be thoughtful about over time, but we haven't made any changes yet.
What would be the tipping point for you, though? I mean, what is it you think you're either looking for, waiting for, that would actually put that over the top for you to make that decision?
Well, one of the key things we'd look at would be if people were asking to transact with us in Bitcoin, because then we might consider whether we would be transferring dollars to Bitcoin at the time of the transaction, or if we wanted Bitcoin on our balance sheet ready to complete that transaction. When we hedge currencies, when we do business in another country, when we think about all the different exposures that we have, we're really trying to match our assets and our liabilities. And we take the same approach to Bitcoin that we do to all the other types of risks that we have.
So given the active trading by Ark Invest on Draftkings and Twitter, let's see how these stocks unfold for the coming weeks. Where I am tracking both Draftkings and Twitter stock here. It's as of date of February the 12th. The stock price is $60.50 for Draftkings. For Twitter, it's $71.60 on February the 12th. And I'm looking at the call option for the March 5th expiration. So I'm looking at the March 5th expiration primarily because Draftkings is announcing earnings report on the 26th, and I just wanted to really capture the full movement, the full volatility on the stock with the earnings announcement and see how this plays out. I'm looking at the strike prices I'm looking at the various strike prices following from $61, $62, $63, all the way to $65 per share. And these are the prices to buy one contract. Currently, Draftkings is trading at $60.50, but for a call option that expires in March 5th, with a strike price of $61, so you're basically thinking that Draftkings stock is going to be up higher than $61 by March 5th. And in order to buy one contract, it costs you $4.40, but you have to multiply this by 100 to buy the contract, because each contract is 100 shares. So it will actually cost you $440. For the strike price of $62, it will cost you $3.85. Strike price of $63, it will cost you $3.40, and so on and so forth. So as you can see, the higher the strike price, the lower the cost, because there will be the less chance that the stock price, which is at $60.50, is going to go up to $65 per share by March 5th. So the contract price is going to cost you less. Same thing with Twitter. Twitter is currently trading at $61.50, and looking at the $62 strike price, it will cost you $1.88. Whereas the $76 strike price is going to cost you only 75 cents. But again, you gotta make sure to remember to multiply this by 100 for one contract, as one contract has 100 shares. Now, next week on February the 19th, I want to see what these option prices end up being. Is it going to go up? Is it going to go down? And eventually calculate the returns on these option contracts, And then if I invested $1,000 in them, what would I come out with? So let's say on February 19th, this strike price, a $61 strike price at $4.40 ends up being $5, right? So that will be a 13% increase. And if I invested $1,000, I will be coming out with $1,136. And let's say for this one, if I bought $65 strike price at $2.89 per share, and this ended up being $5, that's a 73% return, where it is $1,000 investment will yield me $1,730. Now, what if this went down to $1? So that could, where this could potentially happen, where you say a 65% decline, and the $1,000 investment yield me $346. So these weekly option trades are very, very risky, very volatile, where it can go up a lot or it can come down a lot. So it'd be interesting to see how this plays out, and let's see what happens to these option contracts a week later. And for those of you who likes to look at the daily trades of Ark Invest, all of the 5 ETFs for this week, the consolidated view, here are the daily trades for you to take a look.